welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest trends on the D street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll start off by looking at what the Nifty and the Sensex are doing at this point in time as we cross the halfway mark of the trading session. Well, both the indices are still trading down. Now, the 19,300 mark being tested downwards for the Nifty, 66 points down for the Nifty right now. The Sensex has also slipped below that 65,000 mark, so the downturn continues from yesterday as well. 245 points of a decline for the Sensex currently. Let's look at deeper below the surface as well to understand how are the broader markets and the other sectoral indices are also taking shape today. So yesterday, the big breather, despite the benchmark indices being in the red, was that the broader markets were giving some support and were trading in the green. But the mid and the small cap indices have also slipped into the red in today's trading action. The Nifty Mid Cap 100 Index, for example, is now down by almost 0.4% today, over 0.6% of a decline for the small cap 100 Index as well. You talk about the Nifty Next 50, the Nifty 100, 200 and the Nifty 500. All of these indices are down in the red right here. Now, when we talk about the sectoral move, barring gains coming in on metals, on FMCG, which is just flat to positive right now, and the media stocks, rest of the sectors are all down in the red. So it's a broad-based sell-off that you're witnessing in the markets today, led by financials. The Nifty Bank, although just 0.2% lower, is the financial services that are down by almost 0.5%. And apart from this, we are looking at realty stocks that are down by 0.7%, the healthcare stocks down 0.5%. Even the oil and gas stocks and pharma stocks also slipping away in trade. Now, when we talk about the top gainers and the losers on the Nifty index to find out where exactly are the buying and the losing action coming in as far as the Nifty is concerned, you will be able to spot that the Adani Group companies are actually faring much better despite the muted trend in the markets. So Adani Enterprises is sharply higher today, over 4% up in trade. Adani Ports is higher by over 3% today. So the Adani Group companies is where the focus is turning to. Eicher Motors is also up by over 1% in trade. So slight gains coming in from select auto majors right there. Axis Bank, L&T, HUL. So you have far and few between gainers from most of the sectors that are pulling up in trade. On the downside, where is the pressure really coming in from? Let's look at the top Nifty losers, for example. TCS, the big bellwether IT firm, is down 2%. Coal India, Hero Moto is down in trade by almost 2% as well. So these three are the top major three losers of the Nifty. You have Wipro, Hindalco, Tech Mahindra. So metals, IT, they are the big drags on the market sentiments today. But let's welcome our guest on the show. Mr. Abhishek Basu Malik joins in. He's the founder of IntelSense Capital. Good afternoon, sir, and thank you so much for taking the time out for this discussion. First up, I want to get a larger sense of the Indian market and the outlook right there from you. In the last 2 weeks or so, fortnight, we've seen the markets consolidating. Largely in the absence of any positive triggers, be it locally or globally as well, since most of the earnings are also now behind us. Your own sense of what exactly is worrying the markets, why is it finding it difficult to find support and then take a clear direction?
First of all, good afternoon to you and all your viewers. See, markets are very close to the all-time high, so it's not unnatural that things will, you know, uh, people will want to take a little bit of money off the table because the run-up has been very sharp. And whenever you open, a news channel or when you read the financial news, the only thing that you hear uh, globally is gloom and doom. You are hearing that the countries are going into recession, things like that, and so people are worried. People are skeptical, and India has been an outperformer across global markets, and so people are always skeptical. People always worry, especially Indians, right? We don't want to believe that we are stand out and we are great. So that tendency of always sort of questioning our growth or how good things are compared to the rest of the world is something that I think that's at a very broad level. But in general, I think because markets are at an all-time high and things around us are gloomy, that's probably triggering this minor bout of sell-off.
Okay, understood that. Our larger focus is also to understand what is really happening in China and what and how it could impact the world and especially India. So we'll focus a little bit on that, sir. China, which is the world's second largest economy, is actually going through a very tough time. For all our viewers, we want to share that it's reflected in the weak economic data that they've been posting, the downgrades of the growth projections by several global brokerages right there. Now, China's real estate giant Evergrande Group has filed for bankruptcy protection in the United States as well. And the entire world is now feeling the heat of China's economic meltdown. The big question then is that how can India get impacted with China's economic troubles right now? So we'll try and understand all of that. First up, Mr. Basumalik, if you could help us understand the key problems that you believe are are posing as the biggest risks to the world at large from China.
See, first of all, I've been tracking China for maybe a couple of years now, and one of the reasons why I started doing that is because, like you said, right? I mean, China is the second largest economy. It is also the largest exporter of products across the world. So obviously, it has a lot of influence on how the world acts or reacts. Now, what are the things that are happening that we see around in China? So if you look around the world is tackling inflation. China is exactly the opposite. China is close to deflation. Prices are going down, right? So that's one major change. Second is in terms of exports, there is a huge fall of nearly 14.5% in exports over the last 1 year, from July 2020 to this year. Uh, Exports have fallen by 14.5%. Imports have fallen 12.5%. So these are, the broad contours. Now coming to the challenge in hand, which is the housing crisis, the real estate problems, right? Now, real estate is roughly one third of the economy of China, and that is sort of going through a very, very tough phase. And Evergrande, we've seen other real estate companies sort of going through trouble, and that is creating a huge amount of spiral impact on the overall economy. And the last data point I want to share is, again, which is something very concerning, is that the unemployment rate in the youth have, in the last report, is it's more than 20%, I think 21% or something. So when you look at all these things are looking very, very tough for China. And your question of how it will or how it can impact the rest of the world. So obviously, China being the major exporter, what happens is, uh, if they go through a slowdown, uh, that will have ripple effect on other countries as well. One advantage that can flow through for the global markets is that product and prices could go down, because uh, in US or in large parts of Europe, products are going in from China and prices could come down. Uh, how much that will happen again is very difficult, because again there are geopolitical tensions, because China is being sort of singled out by the larger Western economies led by US for because of their military stance and things like that. So those are the pushes and pulls that we have to observe. So
Okay.
how finally it will come out is anybody's guess, but things
Absolutely.
are pretty grim right now in China.
Right. So let's break this down a little further for helping all our viewers really understand, the relationship that India has with China in terms of imports, exports, and the kind of supply chain issues that it could emerge in, and how will that impact India as well. So let's start off first with the property crisis, like you pointed out. So I want to understand, why is the land market so central to China, and how big could this property crisis really get, and what could be the impact on India, if at all?
See, there will probably not be any direct impact on India, but for the Chinese domestic economy, land and real estate has been one of the greatest sources of savings for the common people, right? So if you look at how Chinese people actually save money, the most uh, predominant savings is through real estate. And right now the situation is that real estate prices are falling, you know. So obviously, you've, let's say, put in money in a property, and as long as the property prices keep going up, you have that wealth effect even though you're not selling it,
Yeah.
right? But once they start going down, you have that reverse effect. And so once that starts happening, you will again stop, you know, you will feel the pinch. That is that's what is going on right now in China. uh, Home prices across 70 major cities have fallen in the last 2 or 3 months, right? And that is not something which is something to scoff about. So
Hmm.
when I'm saying 70 major cities, it means that it's pretty much a pan country, happening. It's not localized to one or two cities.
Yeah. Also, there's deflation that China has witnessed. Then, People's Bank of China has lowered the key interest rate right there too. Exports, like you pointed out, have fallen again. Four of the prominent financial institutions have negatively revised China's economic growth projections right there. What does all of this really mean for India?
Again, I mean, directly correlating to India is very difficult because India and China, I mean, probably the relationship is very small in terms of, although I mean, from an Indian perspective, we do import a lot, but from in the overall context of things, it's not something which is significant, right? Insignificant in terms of moving markets. Uh,
Okay,
if I look at it overall from a global market perspective, it makes a lot more difference because, for example, Chinese exports to US is a very significant amount, right?
correct.
So once those things start coming into the picture, it becomes more complex because one side you have these Chinese exports getting impacted, and the other hand, US also is putting in sanctions, putting in indirect ways of reducing dependence on China.
So, Mr. Basmalik, could this also have an impact on the way the flows also come in from foreign investors, since China is going through this economic meltdown and foreign investors just started to put in money in the Indian markets after a long haul? Will this mean added advantage for India at all?
It is definitely an advantage because large global investors are, if you look at the emerging markets basket, there was only, in terms of the larger economies, you have India, you have South Korea, uh, China was there. So if you look at now, what is happening is, China is increasingly getting lower and lower inflows, and that is going to, part of it is going to come down to India. It is not that the entire Chinese flow is going to come to India, but at least a part of it is going to come to India.
Okay, so that is some bit of advantage for India for sure. But just like how you were pointing out, China is the world's largest manufacturing economy and exporter of goods as well. For a lot of commodities, it is the largest consumer as well, including metals. So, I wanted to understand if China's economic activity gets severely thrown off. From the current state, can it really affect the global demand and supply?
Uh, uh, it can. I mean, if you look at metals, I think China is the largest producer. It is also the largest consumer. So obviously, if things go off in China, especially real estate, and which it has been for the last few months, maybe last year as well, demand shrinkage can definitely happen. Couple that with dumping from Chinese plants, so there is definitely a possibility of prices going down for metals and for all these major raw materials. Definitely possible.
Okay, okay. And again, then for the average Indian investor, how does one read through these developments in China then? For a person who has a large part of investment in the equity markets in India, in the debt market, in the property market in India, and some part of the investments, say, across the world through mutual funds as well, what does that average investor really do?
See, from an average investor perspective, I think for the next maybe week, 2 weeks, we need to be a little bit more cautious. We want to see how this plays out. But other than that, I don't think there is any major impact that is going to come to India from whatever is happening in China. That at a bottom line level, I don't think an average investor in India needs to worry about what's happening in China beyond, let's say, the initial knee-jerk reaction that might happen.
Okay, and for manufacturers right here who use a lot of raw materials from China, for all the companies that are dependent on a lot of products from China, since you're saying that ripple effect could be that the prices of such commodities could come down, could it be a near-term breather for them?
It could, but I think prices have already come down over the last 1 or 2 quarters. If you see, so incrementally, will it come down further? I don't know. That assessment we need to do on a case by case basis. But other than that, I mean, I'm not honestly seeing major changes that are going to happen. What is happening has been going on for the last 1 or 2 quarters. It's just that 1 or 2 trigger events take up the news headlines, and then more and more people start talking about it. But it's not that Chinese real estate have gone bust yesterday. Evergrande has been in problems for the last 1.5, 2 years. So it's not something that is happening overnight.
Right, absolutely. And what could that mean for overall inflation in India? That is still a problem because the latest print was about 7.44%. Since in China we are looking at a deflationary trend, and the commodity prices looking that they could trend downwards. Could that mean some bit of breather for the common man here?
No, it has absolutely no relevance. India inflation is driven primarily by two things: food and fuel, both of which have been rising. Last inflation results primarily was driven by vegetable prices. Hopefully, that has reached its peak and it's going to come down. But oil prices are on again, moving up. So Indian inflation has nothing to do with China practically. It's primarily driven, from the supply side.
Okay. Mr. Basmalik, in the Indian markets, therefore, what would your thought be, for the investor right now? What is the strategy that you'd recommend looking at the kind of global setup that we are in right now?
We seem to be in a good spot. Markets are at an all-time high, mid caps, small caps, everything has been doing well. We're probably getting into a consolidation period where markets can go sideways for a while before again taking off for the next level up. Personally, I've been very bullish on the Indian markets. I continue to remain so for at least the next few years. Of course, any untoward, completely unknown event cannot be ruled out. But from whatever is known today, whatever we are studying, I don't see any major problems for India. I think, in fact, India is going to be benefiting from a large number of changes that's happening globally.
Okay, understood that. Fair enough. Let's wrap it up at that then. Many thanks, Mr. Basu Malik, for being with us on the show and helping all our viewers really understand the China crisis at large and what would that mean for the entire world and for India as well, and if there are any opportunities that exist amidst this global setup for the Indian markets and the strategies for them as well. Many thanks for being with us on the show. Let's get back to the markets. Still down in trade, about 250 odd points for the Sensex right now, 64,900. The Nifty at 19,295. So looks like we are going to be ending the week on a lower note. But let's continue to watch out for more market trends, and we'll continue to watch out for in the second half of trading action for you, and understanding from experts what does the current market setup really bring up for you as an equity investor as well. Many thanks.
Hello.